Hello and welcome to Donlemson channel. Today, we're diving into a topic that's essential for anyone interested in growing their wealth in Nigeria: bonds. If you've ever wondered what bonds are, how they work, and how to invest in them right here in Nigeria, then this video is for you. Let's get started. So, what is a bond? A bond is a fixed income investment where you lend money to a government or company for a specific period at a predetermined interest rate. In return, the entity pays you regular interest, known as a coupon, and eventually returns the full amount you lent, called the principal or face value. In Nigeria, bonds are issued by the government and corporations to finance various projects like infrastructure, education, and business expansion. When you invest in a bond, you're essentially becoming a creditor to the issuer. Let's break down some key characteristics of bonds. 1. Face value. This is the amount you'll get back when the bond matures. 2. Coupon rate. The interest rate the issuer pays on the bond's face value. 3. Maturity date. The date when the issuer must repay the principal amount. Issue price. The original price at which the bond was sold. In Nigeria, the most popular bonds include 1. Federal Government of Nigeria, FGN. Bonds issued by the federal government. These bonds are considered very secure. Minimum investment, 1,000 naira per unit, subject to a minimum subscription of 50 million, 1,000 naira, and in multiples of 1,000 naira thereafter, to purchase FGN bonds as specified by the DMO tenor. Ranges from 2 years to 30 years. Common tenors include 5 years, 7 years, 10 years, and 20 years. FGN bonds generally pay coupons semi-annually, every 6 months. 2. State bonds, issued by Nigerian states to fund development projects. Minimum investment 5,000 naira or 10,000 naira, depending on the specific bond. Maximum investment, usually unlimited, subject to the bond issuance size and availability in the market. Tenor, typically 3 to 10 years, depending on the state financial strategy and project timeline. Coupon payment frequency. Most state government bonds also pay coupons semi-annually unless stated otherwise in the bond's terms. 3. Corporate bonds, issued by companies looking for cheaper financing compared to traditional loans. Minimum investment, usually 1 million naira or higher, depending on the issuer's terms. Maximum investment, no defined limit, but it depends on the bond's issuance size. Tenor, often 3 to 10 years, though it varies with the company and the purpose of the bond issuance. Coupon payment frequency. Corporate bonds in Nigeria may pay interest semi-annually or annually, depending on the bond's terms. 4th, Eurobonds. These are bonds issued by Nigerian entities, but denominated in foreign currencies like the US dollar. Minimum investment, typically $1,000 or $5,000 depending on the issuing entity. Maximum investment, no limit, but dependent on the offering's size. Tenor, usually ranges from 3 to 30 years. Coupon payment frequency. Eurobonds typically pay coupons semi-annually, but can also vary depending on the bond terms. One critical thing to understand about bonds is how their prices and interest rates are connected. When interest rates rise, bond prices typically fall, and when interest rates fall, bond prices rise. This relationship can influence your returns if you decide to sell your bond before it matures. Another important term to know is yield to maturity, YTM. This represents the total return you'll earn if you hold the bond until its maturity date. YTM helps investors compare bonds with different coupon rates and maturities to see which one offers the best returns. Now, how can you invest in bonds in Nigeria? First, primary market. You can buy bonds directly from the Debt Management Office, DMO, during public auctions. Second, secondary market. You can trade bonds on the Nigerian Stock Exchange through a licensed broker. 3. Bond funds. These are mutual funds or ETFs that pool investors' money to invest in a diversified portfolio of bonds. Why invest in bonds? Bonds are an excellent choice for Nigerian investors seeking steady income and lower risk compared to stocks. They're particularly suitable for retirees looking for consistent returns, individuals seeking to preserve their capital, diversifying your investment portfolio. I hope you now have a clearer understanding of how bonds work and how you can invest in them in Nigeria. Remember, bonds are a vital part of a balanced investment portfolio. If you found this video helpful, don't forget to like, share, and subscribe to Donlemson channel for more insights on investments and financial growth. Thanks for watching, and I'll see you in the next video.